Welcome to my channel. I'm Mike, and this channel is about my journey going from $10,000 of my own money up to $80,000 in 3 years. Due to the recent stock market correction and its swift rally, I decided to share with you my opinion on buying option contracts, both calls and puts. How do you buy these contracts? How can you profit from them? And also, how can you close an option contract? You can find out the answer to these questions and even more if you stick with me during this video. Also, I will share with you this week's trades, my profit and loss, and also my watch list for next week. If you enjoy this content, please don't forget to smash the like button. This helps the channel grow a lot and also reach to more people. Our first point of discussion is how to buy option contracts and profit from them. But before we begin, let's discuss some basic ideas about option contracts. Buying a call option gives you the right to buy the shares, while buying a put option gives you the right to sell those shares. You don't have to wait till expiration in order to close a contract. You can do that anytime you want. But remember, if you let the contract expire and it's in the money, you will get assigned 100 shares of the underlying stock. You will get 100 long shares if you bought a call option, and you will get 100 short shares if you bought a put option. If the contract expires out of the money, you will lose the whole premium and the contract becomes worthless. The break-even price when you buy a call contract is the strike price plus the premium you paid. On the other side, if you buy a put contract, your break-even will be the strike price minus the premium you paid. For example, if you buy a call contract at $30 strike and you pay $1 for it, your break-even price will be $30 plus $1, and that's $31 break-even price. On the other hand, when you buy a put option, let's say you bought a $20 strike put option and you paid $1.5 for it. That gets you to a break-even price of 20 minus 1.5, and that is $18.5.
Hey Mike, how does this break-even calculation help me?
A curious viewer asked. If you are a long-term investor and you want to hedge your long positions with put contracts, you might want to know what your break-even price is. Also, if you want to start a long stock position by buying call options, which you will eventually exercise, maybe you would like to know what your break-even price is.
But why? Why would you do that? Why would you do any of that?
But in my opinion, if you want to take advantage of a stock movement, like let's say GameStop went from $40 to $350 in 3 weeks, then you don't care what your break-even price is. You'd better look at your risks. How much can you lose? How far and how fast can a stock move? What is the probability of that move? These are the questions an options trader should ask himself. Personally, when I buy option contracts, I don't buy them to break even. When I buy far out of the money calls, for example, I'm going for either 100% loss or 500% gain. I'm not interested in my break-even price. But if I trade SPY daily contracts, I have clear stop loss and take profit targets. I don't actually care if a contract is in the money or out of the money. What's important for me when I exit a trade is the percentage gain on the contract. Now that we've been over the basics, let's see what are the reasons you would buy an options contract. Most people buy option contracts because it has a better risk to reward ratio than buying the actual stock or selling the actual stock. When we're buying puts, for example, you can argue that it's easier to buy a put than find shares to short on certain stocks. When you buy an options contract, your risk is limited to the premium you paid. If you bought a contract for $1, let's say, your maximum risk is $100, but the profit potential is unlimited.
Oh my God! Wow!
Well, it sounds amazing, but is not realistic. You should not expect your long trades to go the same way GameStop went for 3 weeks. That's something rare. I consider buying options more of a gamble instead of a trade. But I do have some rules I guide myself by whenever I buy contracts. You first need to find out what type of trader you are. If you want to swing trade or trade based on technical analysis, your contracts should have a faraway expiration date. Let's say more than 45 days. The main reason for that is theta. We discussed in our Greeks video that theta is the enemy of option buyers. If you go above 45 days till expiration, theta is lower, Thus your contract premium decays less over time. Also, for technical trading, I prefer choosing contracts that are above 0.6 delta on the call side or below minus 0.6 delta on the put side. This way, for each dollar the stock moves, I will capture more than 60% of that dollar move. If you just want to take advantage of a future news or corporate event for a certain company, you can buy a put or a call depending on what you think the market sentiment will be after the event. When we talk about events, earnings reports or news, you can never be sure how the market will react after that event. It's not about if the news is good or bad, it's just about the market reaction to it. When I have these kind of gambles, I usually go out of the money below 0.3 delta, and my expiration is 1 or 2 weeks after the event. I'm calling it a gamble because this is based on hope and my feeling. There is nothing technical about it. My last set of rules concerns volatility. If a stock swings between high volatility periods when the stock surges and low volatility periods when the stock remains in a range, I usually like for the range to be set, for volatility to drop, and then I buy a far out of the money contract with a 3 to 6 months expiration period. For these type of trades, I'm looking to spend a maximum of $200 because that's the capital I'm willing to lose on this type of trades. A particularly good example of this is Beyond Meat. As you can see, after spikes and falls, it pondered in a small range and then it surged or collapsed again. We have the end of 2019 and the beginning of 2020. It happened again in the summer of 2020 and at the end of the last year again. And now it seems to start a new consolidation in the $135 to $150 area. Based on this chart, do you think Beyond Meat volatility will increase? Let me know in the comments below if you see a surge in price on Beyond Meat stock in the next 6 months. Because theory is good, but practice is better, let's go to my Interactive Brokers platform and buy some option contracts. This is TWS from Interactive Brokers. I have my 2 charts on the left. The bigger chart is for setting up the time frame I'm watching, usually 1 minute or 15 minutes, and the small chart is for daily overview. On the middle of the screen you can see my watch list, and on the right I have the option chain, the company specific news tab and the order tab. As we discussed in my previous video, the option chain has the strike prices area on the middle, calls on the left, puts on the right. The bluish highlighted area is for in the money contracts and the black area is for out of the money strikes. We're currently looking at SPY daily contracts. There are only 30 minutes till the market closes and SPY has a double top on the 1 minute chart. You can wait for a breakout and buy a call contract or wait for the rejection and buy a put contract. Since there's not much time till close, I believe a 50-cent move is the most you could get out of it. This is an example of an intraday trade. Let's say we think SPY will go down. I would look at the 395 put contract because it has a -1 delta. That means for a 50-cent move in SPY, the premium will also move 50 cents. In order to buy the put, you can click on the ask price and the contract will appear in the strategy builder. You can see it here. Buy one March 12th put at $395. Best way to place the order is to look for the mid price. This way you get a fast fill with a decent commission. You set the order as a limit order. This way you are guaranteed a fill at your selected price or better. I wouldn't recommend using market orders on option contracts. Check your quantity, price and hit submit. Once submitted, the open order will appear in the order tab. You can change the price here if you don't get an immediate fill. I changed it to 1.57 and got filled right away at 1.56. In order to close this contract, you go to the same option chain, you look for your put strike and click the bid. If you forgot your strike or contract date, you can see it in the trades tab. Here you can see my last trade on SPY for $1.56, where I paid $1.06 in commissions. In the strategy builder, you will see a sell for one contract on March 12th for a put at $395 strike. Again, you can select the mid price for a better fill. If you want to exit the trade fast, you should hit the bid directly. If you are confident you can get a better price and you are willing to wait, you can select the ask or a higher price and wait for it to be filled. I got my order filled at $1.54 immediately. If you go to the trades tab, you can see the realized loss on on this trade. As I was saying earlier, you are not forced to keep a contract till expiration. You can close it as soon as you like. If you want to swing SPY, it's better to choose a different expiration date. For example, if you think SPY will drop by next Friday, you can buy a put with expiration on the 19th of March. You can buy an in-the-money or out-of-the-money contract depending on your risk tolerance. Remember, your max loss is the premium paid. If SPY will move in your desired direction, delta will help you increase your profits. An in-the-money delta for the $395 put is minus 0.64. So for each $1 drop in SPY, your premium will increase with $64. Also, you should take into account that for each passing day, your premium will decrease by $20 due to theta. If you decide to buy this contract, you have to pay $475. If you look at the possible performance graph, you can see that your loss is limited to your premium. But if SPY decides to collapse next week, you can make a lot of money. On the weekly contracts, the same strike, $395, has a 64% chance of closing in the money. That means SPY has a 36% chance of closing above $395. Do you agree with this? I really don't. That's why I'll buy a call contract for Friday. Since buying options is risky, I don't want to pay a lot of money for this. I believe SPY can hit $400 next week before Friday. I'm not sure if it will stay there, so I'm buying one SPY call for the 19th of March at $400 strike and I'm paying around $70. Since I'm on a margin account, I only have a $7 margin impact. My order has been placed, but it seems there's not much volume going on. I have the option to wait for my price to get filled on the bid or simply hit the ask and get an immediate fill. I finally got filled at $71. This is the maximum amount I am willing to lose for this trade. I will not close the contract next week if SPY is not moving in my direction. I will simply let it expire worthless. Based on delta, I can expect an $18 move for $1 move on SPY, but a $13 theta decrease per day. If SPY won't open on Monday above $395, my contract will be valued less than what I paid. Let's try a different stock. Let's look at AMD. It has dropped below its 200 days exponential moving average last week and bounced back above it. I'm bullish on AMD for the long term, but you can only guess the short-term moves in the market. I believe AMD will get back to its previous resistance of $95 during the next 3 to 4 weeks. I'll choose an April 16th expiration date and the $90 call contract. This one is right below 0.3 delta and the risk to reward ratio is acceptable for me. If by the 16th of April AMD is trading at or below $90, I will lose the premium. I got filled at $1.57 and paid a commission of 78 cents. If you have a higher capital to allocate, you can choose an in-the-money call contract. Here you can capture more dollars from the move since your delta is closer to 1. On my $90 call contract, delta is 0.24. For each dollar AMD is moving up, I gain 24% of that move. But if you choose the $65 strike call, delta is 0.93. So you catch 93% out of each dollar move in AMD, but you pay $1,600 for one contract. On the other hand, if you think AMD will go down, you can buy puts. The logic is the same, but on the downside. What should you get from all of this? Buying option contracts is an alternative to day trading. Also, buying option contracts can bring you consistent profits if you have an adequate risk management system. Short-term options should not be confused with investing. This resembles more to gambling rather than investing. If you have more questions about buying option contracts, please leave the comments down below. In our next video, I will go over the selling side of the option contracts. I will show you how and when to sell contracts. And also, I will show you a method to generate monthly cash flow with a limited amount of capital. Now let's get into this week's trades. Since I got exposed with most of my contracts being in the money due to the recent stock market correction, this week I simply adjusted some of my positions but also got into 3 new trades. Although it was a slow week for me, I still managed to end the week with $400 in realized profits. My total realized gains since I began the challenge is $5,200. If I were to close all my contracts today, I would have to take a loss of approximately $3,000. That is mostly due to AMD, PLTR and NNDM. I'm not going to do that. I'll continue to roll the contracts until I can close them for a profit. In trading, you never have a loss until you close the trade. This is valid for both option trading, investing, and stock trading as well. This week I managed to roll back my Nano Dimension contracts from $10 strike in August all the way to $12.5 in May. This way I reduced my time till expiration and also got an additional $280 for the trade. I also managed to roll back PLTR from a $22 strike in May to a $25 strike in April. I got $92 for this trade. By decreasing my expiration dates, I increase my theta decay on the contracts. So if the stock doesn't go down, my premium decreases faster. I'm trying to get them to become worthless as soon as possible. My other 3 trades for the week were 3 contracts on Carnival Corporations, which I managed to close by the end of the week for $99 in profit. I also sold 2 contracts on Twitter and 3 contracts on TWTR. For these I got a total of $320. As you have seen with the call buys, I am bullish on the market on the short term. I believe the new stimulus checks will add capital to the markets and we will see a run for the next 2 to 3 weeks. What happens next? I don't know. We'll wait and see. But I am watching some stocks for next week. Let's see which are these. My first watch is AMD. Since it bounced back from its 200 days EMA, I'm looking for an upward move and I want to roll down my $80 and $85 puts. As soon as I manage to close these, I'll enter new positions on AMD. I'm waiting for Corsair to bounce back above $35 in order to sell a 1-month put contract. Corsair doesn't have weekly option contracts, so I would need to find a trade that matches my 3% weekly goal. That would mean I have to get 12% of my margin requirement for 1 month. Snap is a stock I'm watching closely, looking to sell a put contract at around $60 strike. I'll see next week how much money can I get from this type of trade. The $60 mark is not ideal since it has no support area around that price, but I have a bullish sentiment on Snap. If RKT will not drop below $24 next week, I'll be looking to sell new put contracts on it at $23 or $24 strike. It depends a lot on the stock movement and how does the volatility impact the premiums. I'm looking at Beyond Meat again for a decent price at $130 area. I tried to get a fill on Friday, but unfortunately I didn't manage to get the price I wanted. I'll be stocking Beyond Meat this week as well. Thank you for sticking with me till the end. I'd appreciate your thoughts written in the comment section below. What stocks are you watching? Did you enjoy this video? What information would you like me to share with you? All ideas are valued and taken into consideration. Please like, share and subscribe if you enjoy my content and you would like this channel to grow and reach more and more people every day. Thank you and have a great trading week!